Good morning and thanks so much for tuning in. This is Trade Talk on BK Prime. My name is Alex Matthew and with me is Hiral. Morning, Hiral.
Good morning, Alex.
And happy Monday to you. Happy Monday to all of you as well. We're a little delayed on the Trade Talk today, so let's jump straight into the action. As things stand, the Asian markets pointing to a bit of a muted sentiment, but we're still looking at a positive start for the Nifty 50, at least according to the GIFT Nifty. But let's jump straight into the action as I pointed out. Reliance Industries, the annual report is out and there's a lot to talk about. What, according to you, are the key takeaways here?
Thanks, Alex. So clearly, I'm just going to take you through a few of them, and then we have Vikas who will deep dive in the renewable part of it. Now, firstly, what they've said is that the gross debt in FY23 has come in at 3.14 lakh crores. A standalone gross debt of around 2.16 lakh crores is what they've seen so far. And Reliance Jio has around 36,800 crores, whereas retail has around 46,644 odd crores. Moving on, if you see in terms of where Reliance Jio goes, what they have indicated is that Jio Financial Services will be listed soon, and clearly RSIL will be renamed as Jio Financial Services. So that's the second part of the update. And thirdly, in terms of where Reliance Retail is concerned, they've said that they've crossed a billion transaction benchmark in terms of FY23, and they will aim to actually ramp up the FMCG business going ahead. So these are a few of the key takeaways in terms of the headlines, Alex. But let's quickly head across to Vikas to give us a lowdown in terms of what's the key announcement from the energy space. Vikas, good morning, and kindly take us through the key takeaways.
Yeah, good morning, Hiral. As you rightly said, the Reliance Industries board has sought approval on a special resolution from the shareholders where they are planning to set up integrated renewable energy power projects. So this will be required for transmission and distribution, utilities, commercial, residential space, mobility and transport, where any kind of renewable power projects, especially including wind and solar, as well as battery energy storage systems will be set up. The company, once it will get the approval from the shareholders, it can be registered by the Registrar of Companies by Maharashtra. Although the structure of this is not yet clear, what whether it will be a separate company, SPV level, how it will be set up, but this is what the company is planning to do as part of its target to go carbon neutral by 2035. This is much aggressive as compared to India's plan by 2070. So a lot of investment is also required. A company has already announced investment of 75,000 crore by 2030. And once it is clear, or once it validates about the scale and economy of it, they may even double it by 250,000 crore. So this is what the company is planning under the renewable plans. They'll initially have a target of 20 gigawatt by 2025, and this will be ramped up by 5 times to 100 gigawatt by say 2030.
Okay.
This is what.
Got it. Yeah, because and very key updates there, specifically on the renewable plan there, and we've also talked about several aspects of the other businesses. So Reliance clearly something that you should focus on in trade today, but there are several others that you should also focus on the back of earnings, and one of them is from the FMCG space. Britannia posting results after market hours on Friday. And Cesar joining in with the key highlights. Cesar, from what I saw on the face of it, it's a miss on the PAT number. But what can you tell us about the key details? Good morning.
Right. Morning, Alex. So Britannia has posted a 36% increase in net profit in the June quarter, but missed analyst estimates like you mentioned. The miss was mainly on account of increased local competition. To stay ahead of the competition, Britannia said that it has taken several price corrections. Now, this is something that we have seen in the earnings call for other consumer companies as well, be it HUL, Dabur, Marico, as well as Nestle. So all of these companies have called out the resurgence of local brands, which struggled in the aftermath of COVID, and now how they are heading on the top of FMCG giants. Now, coming to the revenues, it rose 8%. This was partly aided by robust distribution gains. The company stocked up its products in the mom and pop stores across the rural markets and have also stepped up investments behind its brands. So sales of chocolates and biscuits have clearly defied the inflation-led volatility in demand that we have seen for branded consumer goods such as cooking oil or tea. Operating profit rose 38% while margins grew 17.2%. Both of these parameters also missed estimates. Now, Britannia's post-earnings call with analysts is scheduled today, so more details are expected to come post that.
Right. Thanks, Esa, for getting us the details. It's going to be interesting to watch out for how Britannia reacts in trade today. But moving on, Himansh is standing by with more updates in terms of earnings, specifically from the financial space as well as some from the sugar pack as well. Himansh, good morning. What do you have?
So we have SBI and Bank of Baroda firstly. So SBI had a profit beat, which was led by lower credit costs, and the corporate pipeline of standing at 3.5 trillion in loans was driven primarily by the private sector demand. And the portfolio credit quality is largely stable. Then we have Bank of Baroda, which reported a mixed quarter with PAT jumping 88% year on year, which is in line with analyst estimates, while net interest margins declined by 26 basis points. Then Punjab Sind Bank, the upset in PAT was largely due to lower other income noted this quarter, along with higher provisioning. The bank has also improved its credit quality largely over the previous quarters, with gross non-performing assets down by 4.54 percentage points over the last year. Delivery saw a revenue increase by 11% over the last year, and the net income stood at roughly a loss of 89 odd crores. Then you have Balrampur Chini Mills, where the profits grew by a solid 6 times, and the EBITDA margin stood at 11.74%. AFL India also had a revenue increase of about 14.3%, and the PAT was also up 6.1% over the previous year, standing at 66 odd crores. Aditya Birla Fashion, their losses widened compared to analyst estimates, and the company saw a slowdown across markets in discretionary spends. The wedding category was especially impacted because of fewer wedding dates, and the athleisure and loungewear segment continues to be a drag. So those are the earnings summed up for you guys.
Thank you so much for that, Himansh. And the PSU banking space is going to be something to watch out for. In fact, the PSU bank index dropped as much as 0.8% over the last week as well. You saw cuts of about 4.5% on that index. So watch out for that back. Varsha's joining in with more earnings. Varsha, there's lots to talk about. What's on your list today?
Yeah, so we've got a bunch of companies who have reported earnings. So number one, we have Neogen Chemicals. Now, the increase in revenue was in accordance with the addition of the new capacities in organic and inorganic chemicals through brownfield expansion. While the PAT was impacted due to high finance costs and depreciation costs due to ongoing expansion initiatives, plus the impact of initial costs associated with restarting of Bewley Chemical, which they have acquired. The next company that we have is Mrs. Bector's Food Specialties. Now, there was good uptick in revenue, but the PAT, there was uptick in PAT by about 173%. Now, biscuit segment revenue, there was growth of almost 25%, while bakery segment had a growth of 26% compared to Q1 FY23. Also, there was 3% in decrease in material costs, which helped to aid in their EBITDA margins. The next company that we have is Pheniotex Chemical. Again, the revenues were down, though there was good uptick in volume growth, but due to low realizations, the revenues were down, but the net profit was up 29% due to reduction in expenses, that is material cost. The next company that we have is Godrej Fluorochemicals. Now, again, there was due to low realizations, the revenue was down, but company is optimistic on new fluoropolymers for industries like EV, solar, and semiconductor. The next company that we have is CE Info Systems, famously known as Magma India. Now, there was good uptick in revenue. Also, the PAT was up 32%. Now, the company achieved highest ever quarterly revenue, EBITDA, and PAT growth with across all the segments. Also, it saw a boost in its IoT business and in usage of consumer-facing Mapple's Magma India app. The last company that we have is APL Apollo Tubes. Now, there was good uptick in revenue, plus there was 60% growth in PAT. Now, the sales volume also increased. Now, the company is moving from commodity products to value-added products, which will help to increase their margins, which we can already see in the recent quarter.
Thanks, Varsha, for getting us the details. So that's going to be an interesting pack to watch out for. But moving on from reviews to previews, you have GCPL from the FMCG pack that will be reporting numbers today. Sesa is still with us to get us more details on it. Sesa, what are the key numbers that you are watching out for, and what are the key highlights we should be looking at?
Right. So if we look at the Bloomberg estimates, Godrej Consumer is expected to report a 12% increase in revenue. Net profit is estimated to increase by 13%. EBITDA is projected at around 685 crore and margins are expected to grow at 19 to 20%. Now, the expansion in margins will be driven by robust gross margin expansion. Again, like we have seen in most consumer companies this quarter, a good part of the gross margin gain is likely to be partially plowed back into ad spends. So Godrej Consumer in its quarterly update also said that the India business recorded a double-digit volume growth in the June quarter. So analysts are looking at about 11 to 12% growth here. As for the sales growth, the company has said that it is likely to be in single digits because of price cuts. Now, GCPL has also acquired Park Avenue and Kamasutra brands from Raymond. So there would be a one-time, one-off item of stamp duty paid here. Because of the slum sale transaction. So primary sales for Raymond Consumer, however, is expected to be weak on account of a cut down in inventory. But we must remember here that Raymond Consumer will be included only for about 6 to 7 weeks of sales. In coming to the international business, it is likely to be impacted slightly because of currency devaluation. The Indonesia business, which has been a laggard for several quarters, has finally delivered steady performance in the previous quarter. So analysts expect the growth momentum to continue this quarter as well. Now, other things to watch out for would be GCPL's investment in the grooming category, continuous development of new products, as well as a focus on expanding the high margin business.
All right. Thanks so much, Sesa, for those updates. Another counter that you should watch out for, and consumption as a whole is a theme that we're focused in on. We've got the Pharma pack that is in focus and several business updates that you need to track. Of course, we've also got a story on the website, bqprime.com, about whether or not you should start investing in the Pharma stocks. So watch out for that. We've got Monal joining in to tell us about a few counters. Monal, good morning. What do you have for us today?
Morning, Alex. Yes, a bunch of action from the US FDA, Cipla being the first one. The Pithampur unit, from which one of the key respiratory products, the generic version of Advair, was applied for, has now finally been classified as an official action indicated. While this is pretty much in line with what the management was expecting, as stated on their call, and also what the analysts were anticipating, it would mean that this is going to delay this key launch by, say, 24 months. At least they're expecting it to come out by the end of FY25. Then on the other side, we have Aurobindo Pharma, which has received a clean chit from the US FDA. No action indicated. Their plant at Cherla was recently inspected between July 28 to August 4. And the third that we have is Dr. Reddy's. The plant was inspected in May, their Hyderabad API manufacturing facility. And now the inspection was concluded with a voluntary action indicated. Now, this would mean that the company will receive certain. It's been said that there are certain lapses at the facility, but they have to deal with it themselves, and it wouldn't be anything major. So 2 positives and 1 negative.
Right. Thanks, Monal, for getting us the details. It's going to be interesting to watch out for because all eyes are on the Pharma pack as well in terms of price movement. But moving on, a lot of other counters that are in focus in today's session. We'll have Mika and Saloni get us the details. Firstly, we have Mika. Good morning, Mika.
Good morning.
What's on your list?
Yeah, so first we have NDTV, which has been granted permission to uplink and downlink 4 of their news channels, namely NDTV Rajasthan, NDTV Madhya Pradesh, NDTV Gujarati, and Marathi. Next, we have AI Engineering. Its subsidiary Vega Industries is to acquire 30% of the business in the Mining Products and Service Private Limited in Australia by entering in a share purchase agreement. The acquisition cost is set at 7.86 million Australian dollars, and Vega ME has an option to acquire 40% stake in Vega MPS over the period of 3 years. Next, we have Army Organics, which has approved a preferential issue of up to 4,43,500 equity shares on a private placement basis to raise around 51.84 crores. The issue price is fixed at rupees 1,169. Next, we have ABB India, which is to consider a special dividend on their August 11th board meeting. The next stock we have is Naveen Fluorine International. Its subsidiary Naveen Fluorine Advanced Sciences has received a direction from the Gujarat Pollution Control Board for closure of the operations of their industrial plant in GIDC Dahej. The company is also to pay an environment damage compensation of rupees 1 crore. Besides the EDC, the financial impact of the order is not currently ascertainable. Then we have the IPO updates of the currently ongoing IPO. SBFC Finance was subscribed 7.09 times on the second day of the IPO. The HNI portion was subscribed as 12.95 times, and the QIB portion was subscribed at 6.71 times. The company's IPO is a total offer size of 1,025 crore rupees, of which 425 crore shares will be allocated to an offer for sale. And then finally, we have Concord Biotech, which was subscribed 58% on the first day of its IPO. The HNI portion was subscribed from 1.01 times, and the QIB portion was subscribed for 1%. The issue size is 1,550.6 crores at a price band of 704 to 711 rupees currently.
Thank you so much, Mehika, for those updates. And I understand that there are a lot of numbers being thrown at you. So in case you missed any of that, or you'd like to read it in more detail, all of this is available on the website, bqprime.com. We generally set you up with a story called Stocks to Watch and all you need to know. So that's what you can look at leisure. In the meanwhile, we've also got Saloni joining in with more stocks you need to look at. Saloni, morning. What do you have for us?
Morning. So first we've got news on Brookfield India Real Estate Trust. So the company will garner rupees 400 odd crores by issuing 1.27 odd crore units at a price of 315.04 per unit to the sponsor group entity Project Diamond Holdings on preferential basis. The company also plans to raise rupees 750 crore through the issuance of commercial papers to finance acquisition of 2 commercial assets in Gurgaon and Mumbai. Then we've got Kotak Mahindra Bank, which was fined rupees 10 lakh by the NSE on Friday. The penalty was for the bank's failure to upload securities pay-in details on clients within the prescribed timeline. The bank cited operational delay due to heavy rains in Mumbai as the reason for the lapse. Also, you should watch out for HFCL and Sterlite Tech in today's session as well, because the companies will see impact due to the government's approval of a last-mile optical fiber-based broadband connectivity plan for 6.4 lakh villages across the country under the BharatNet project that has an outlay of rupees 1.39 crore. And 2 other companies that will be in focus that are Dixon Technologies and Optimus Infracom. This is the result of India's DGFT issuing a new order saying that the companies can import electronics such as laptops, tablets, and other personal computers without a license until October 31st.
So, yes. Thank you so much, Saloni, for those updates. Just a small point, 1.39 lakh crore. The lakh got missed out, but all the same, significant updates there. One last point that we'd like to make, and that has to do with Paytm, and news just coming in that an entity 100% controlled by the promoter Vijay Shekhar Sharma is going to acquire 10.3% stake in Paytm from Antfin Holding. And that's a significant amount. This is a block deal that will be done in just a short while at the market price. And with that, you'll have Vijay Shekhar Sharma's stake in the company, either directly or indirectly, rise to 19.42%, and Antfin shareholding will fall to 13.5%. You should expect the stock to react.
And it's an interesting update, because what I'm picking up is that this is going to be an offshore transaction valued at $628 million, but there is no cash transaction that actually takes place. And this is going to be interesting from a stock perspective as well, because Friday's session, Paytm itself did close almost 3.5% to 4% higher. So today, again, this would be something where it will help build momentum.
Certainly. And the strategic nature of it as well. You'll see Vijay Shekhar Sharma's stake going up quite significantly. He's been a very strong proponent of the company and its operations. So we'll have to see what the market reaction to that is going to be. We're completely out of time on this edition of Trade Talk, though. It's been an absolute pleasure bringing it to you from Hiral and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. Lots more coming up on BQ Prime.